Good morning, everybody. Welcome to the ESS Finance Subcommittee meeting for July 10th, 2025. I'd like to welcome everybody. The first item on the agenda is the June 12th, 2025 summary of subcommittee action, the minutes. Had everyone had a chance to review those? Any modifications or changes? If not, I would take a motion for approval.
Sherry, I'll move to approve.
Thanks, Sherry. Do I have a second?
Says Melissa or Amy did in the chat pod.
Okay, thank you. Thanks, guys. All in favor, say aye.
Aye.
Aye. Opposed, same sign. Motion carries. We'll move on to the July summary of, the accounts receivable update with Lisa.
Everything outstanding is maintenance fees from counties. I think we're looking really good. We're planning to follow up with the counties that we have not received payment from later this week, knowing that you have payment cycles that have to be adhered to. And we'll be issuing payments to the service providers as soon as we receive all those invoices. So looks good.
Great. Anybody have any questions for Lisa? Hearing none, we'll move on to the July summary of the June ESS payments with Samantha.
Accounts payable for June. We did have our insurance, most of our insurance bills for the year come in. So you'll see the $1,502 here for nationwide, and then also a $15 credit from them. It was a late fee that they reimbursed from last year. And then the Chubb insurance for $3,249 is here. That also came in June. That is also for that's also a yearly expense. We have one more that we just received yesterday for travelers insurance. So you'll see that on the next month's meeting in July. The $3,900 as well as the $1,950 is for the annual renewal for the SUS virtual subscription. This is an annual expense. We originally thought we would only need 10 licenses, but we decided to add another 5. The $533.55 here. So normally in June, we only have 2 payroll expenses hit. However, when we moved Myrna up to the technical lead, her wage increase didn't take effect. I guess it didn't that first payroll, it didn't hit. So we compensated her for what she was owed there. So that's what you see in that extra one.
Yeah, I can comment on that. That is just as a result of the pay adjustment happening in the middle of the pay period. So there's nothing unusual about that. We just had to do a second payment to make sure it was all taken care of.
And then the last 2 payments for Denman also came in at the end of June. The first one for the $2,100 is for the $990 for the association, and then the remainder of the audit. IBM did also come in June. This is also yearly expense. Currently, this is in the reserve, but we're hoping to move this back to the budgeted expenses sometime this year. For credit card, the $74.89 was to buy an external hard drive for Mancy. And then the PRIA membership did come in for the annual membership in June as well for $575. I'd be happy to answer any questions on the payment reports for June.
Samantha and Stacey, there are a couple of things I would like to just make some supplemental comments on. The first one, kind of going back to the payment report with the references to the SUSE virtual machines. That's kind of hard to interpret what that is, but just as a reminder, our operating system, even though we're in the cloud, our operating system is based on Linux. It's not, not a Microsoft type of a product, and you have to have the appropriate infrastructure software in order to run on virtual machines. And the particular product that we have historically used is known as SUSE. You can look it up on the internet. But we had issues with them, you may recall last year, in terms of tracking licenses, and we ended up having to provide some additional payments to them with because of issues of, I guess, lack of oversight and input from their resellers. So we had to take care of that. So a decision was made that we didn't really want to have that happen again. And so while Kelly was still with us as the technical lead, a decision was made to migrate over to a product called Ubuntu. It's another type of Linux operating system. And the advantages of that were that they did not have the same licensing fee structure, that if we made the switch, we would not only reduce our risk of incurring surprise payments, but our actual licensing costs would go down. We were in the midst of that migration when Kelly made a decision to move on to other work. And so we had roughly 15 SUSE licenses remaining, sort of being midstream in that transition. We felt that by the end of June, we could get that down to 10, and that's how we built the budget. Well, the migration progress did not continue as quickly as we hoped. We ran into a few bumps in the road, so to speak, and as a result of that, we're going to have to secure those additional 5 licenses in order to be legal, so to speak, within the licensing system. We still do have an intention to complete that migration. Our goal was to have that done by the end of this calendar year. You may be interested to know that we did complete the 1099 contract agreement with Kelly, and one of the main things he is helping with is to complete that migration. So we do have a plan, and we're implementing it, but it's probably going to take till the end of the calendar year to fully complete that, and that's why we have some additional SUSE expenses right now that we're going to have to put back into the budget the next time we do a budget amendment. The other thing I want to report on that is important for the Finance Subcommittee to know is that the IBM DB2 license, which is another critical piece of our operating system, we did receive the renewal. The renewal is represented in this payment report, and they did come in about where we expected them to be from a budget perspective. So we're going to have to adjust the budget for this particular thing. But I also want to note that IBM is changing its rules, and they are becoming more strict on license usage monitoring. And we're going to have to develop a strategy and possibly secure some type of additional external assistance to review and make sure that we're staying within our license requirements, because the risk is that if we don't do that, we could have a surprise bill from IBM in the future, the same way we did with SUSE. So Muna, who is currently out after having some surgical procedures done, which we don't need to go into, but she's doing fine, by the way. But Muna is in the process of doing some shopping around for different alternative ways that we can manage that IBM license. And she could do a much better job than I can of explaining what that is. We also have Kelly helping her do that shopping. So at some point, there probably is going to be an additional budget item relating to IBM, not the base license, but that supplemental service or products that we're going to use to make sure that we're staying within the license parameters. So it's one of those things where um, not really much to report right now, but there will be more to report on it later on. So I just wanted to make sure you had a heads up that that was coming. And that's all I had.
Thanks, Phil. Any other questions or comments? Anyone? Thanks for the explanations. I was diligently trying to write it all down, but I may have more questions later once I get it all done. No one? Okay. So we need to continue, right, Samantha?
I think the approval for the payment reports.
Oh, I'm sorry. I apologize.
That's okay.
So I would take a motion for the July summary of the June ESS payments.
This is Geraldine. I'll make
Hi,
that motion.
Gerald. Hi, Geraldine. Thanks. Do I have a second? Looks like Amy
I-
seconded the chat pod. All in favor, say aye.
Aye.
Aye. Opposed, same sign. Motion carries. Now we'll continue with Samantha with the Fund 255 reimbursement invoices.
Okay. July Fund 255 reimbursement came in at $45,585.27. This was based off the two regular payroll bills and then also that catch-up bill for Myrna. And those invoices are here. I'd be happy to answer any questions on the Fund 255 reimbursement, or I'd ask for acceptance and approval to send this to the state treasurer.
Any questions for Samantha? I will go ahead and make the motion to accept the July Fund 255 reimbursement invoice. Do I have a second?
This is Geraldine. I'll second.
Thank you, Geraldine. All in favor, say aye.
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 Opposed, same sign. Motion carries. Now we'll move on to the May financial reports with Samantha.
All right, but Bankers Trust checking account started with a beginning balance of 0 and ended with the ending balance of 0.
There's a lot of pages.
I know. The account was able to be successfully reconciled. The money market sweep account started with a beginning balance of $1,274,513.43, with an ending balance of $1,211,936.94. And we were also able to successfully reconcile that account. The drawdown account, the cleared balance of $91,834.80. Budgeted profit and loss, budgeted income came in at $257,149.76 against budgeted expenses of $157,691.25, with a total net income of $99,458.51. So the regular profit and loss, so with the revolving expenses, again, the budgeted income at $250,149.76, with revolving income at $3,665,578.07, with total income at $3,922,727.83. With budgeted expenses at $157,691.25. The depreciation for the month was $22,604.75, with revolving expenses at $3,667,311.54, with total expenses at $3,849,023.42, with a total net income for May of $73,704.41. The balance sheet for May, the $666,676.88 is the total in the banker's trust checking account. So this number actually reflects the total of non-reconciled items for the month. The banker's trust money market sweep account at $1,211,936.94, with total assets and liabilities equaling $2,932,918.18. So for May 2004 compared to 2025, money market interest income came in at $1,371.28 against the banking fees down below here at $1,526.29. So for May, we still weren't seeing, the interest that we were hoping for when we started this account. However, it still is beneficial. We're still at paying around $150 compared to that $349. However, at the end of last month, we were able to meet with the Bankers Trust team. We hadn't met with them for quite some time. We were able to meet a couple of the new members that we have been working with. And they were able to raise our interest starting that last week of June to 3%. So if you remember when we started, we were hoping for a 1.8% interest income on the money that we are keeping in that account, which was higher than the 0.75% interest rate that we were getting with just having the checking account. So they were able to raise that to 3%. So in the month of June, for that last week, you'll see an increase. I think June's interest came in just over $1,600 for the month of June. So July will actually see that. We should see this more than double. The new rate is part of a strategic update that Banker Trust has made to stay competitive and offer more value to their customers. The previous rates that they were giving were in line with their policies at that time that we set up the account. However, they have raised rates to strengthen the client relationships. We also had 2 chargebacks in the month of May. So that's what that $70 is there. We're not making money on that. Every chargeback or return that we receive, we are charged $35. So we're just passing that expense back to the customers. In May of 2024, we were planning on having the ILL Deputies Conference. We are not doing that in 2025, so that's what that difference is here. Point of sale income, fee income for May. Point of sale sales have been way higher than what we projected for 2025. So that's what you'll see, that 88% increase compared to 2024. And it's the same with the on-demand for Lynn County, with all those boat renewals, vitals, and everything that has been going on this until I believe June. I think boat renewals ended June 30th without a fee. I have been seeing that decline greatly. I think we've only had a couple renewals this last week for Lynn County, and POS has also declined these first 10 days in July. E-submission fees up 14% compared to last year. And then the local service provider maintenance income. So last year we actually sent these invoices out in June. This year we were able to get it completed and approved by the committees in May. So that's what this $90,000 is. So next month you'll see the difference here where we have a large amount in that income and we don't have anything for 2025. Budgeted income up 88%, mostly due to the local maintenance provider maintenance fees. The annual audit. So we received our progress billing for Denman early in 2025. Last year, the first progress billing came in May. This year, it happened in June. So that's what that increase is there. The bookkeeping CPA, we just moved accounts. So you'll see this $6,888. But then we just moved accounts, so we just put it in line with the rest of the payroll. Also, this increase is due to the 3 billing periods in the month of May. And then the accountant position wasn't filled into the very last week of April, so we're also missing a week. And then also benefits were not in place in 2024. The bank account analysis fees we touched on when we talked about the money market interest income. Gateway fees did increase quite a bit, 38%. That's due to the rise in submissions and transactions. Data center and hosting services. So this is our Light Edge account. We have been seeing normal bills come in. If you remember in 2024, we were having issues pretty much every month with their billing, and I think they have got that under control now. So you'll see a credit for this $11,000 from 2024 at the end of June 2024. Developer equipment, we were able to get the two developers new computers. They're running on pretty old systems, and this was approved in the May meetings and is in the budget. Budgeted expenses for 2024 compared to 2025 did increase by 12.5%. However, net income did increase by 102,000. This is mainly due to the maintenance service fees that hit in May this year instead of June. Journal entries for May. These are mostly the daily journal entries, moving money in and out of the sweep account and checking account, and then the depreciation for May. And the credit card, the beginning balance of the credit card was $1,789.48 for May, with an ending balance of $11,458.82. And the reconciliation for the credit card account. Fund 255 had a beginning balance of $150,459.29 with an ending balance of $156,391.02. Total receipts, which matches the Fund 255 reimbursement to the State Treasurer's Office, $45,585.27. And the reconciliation for the Fund 255 account. The profit and loss. And the balance sheet with total assets and liabilities equaling $156,391.02. I'd be happy to answer any questions on the financial reports for May.
Any questions for Samantha? I have one real quick, Samantha. Maybe you can help answer. So that was great that you met with the new employees with Bankers Trust or the new team. Any clue as far as like the analysis fee, that kind of, hopefully it'll be offset with the amount that we'll receive in interest, but did they kind of talk about how that's determined, or will that stay about the same? I know it depends on the transactions, but do they kind of talk about, because with the interest going to 3%, or did they say, well, and then we're going to raise your analysis fee a little bit, or I just wondered if that was talked about.
No, I think the analysis fees are going to stay about the same, and they've always been around that amount. It just didn't seem like that much, because when we only had the checking account, we were getting a savings credit every month. So that's why you see those lower numbers, that $300 number. It's because that also included that 0.75 interest. So, it fluctuates every month. June is normally the highest for the analysis fees because we have more transactions coming in and out of the banking account. But they're expecting those to stay about the same. So really, all that's going to be affected is going to be this money market interest income, which we're expecting to be more than double than what we're seeing right now.
Yeah, that's great. Thank you very much. Any other questions or comments for Samantha? Looks like Sherry gave you a compliment in the chat pod. You always do a great job, Sam, with the explanation. So kudos to you. Anyone? Well, hearing none, I would take a motion for the May financial reports approval as presented.
Since Mel, I can move to approve.
Thanks, Mel. I will go ahead and second. This is Stacy. All in favor, say aye.
Aye. Aye.
Aye. Opposed, same sign. Motion carries. Okay, we'll move on to the ESS financial and strategic review discussion. Oh, we've got metrics.
Thank you. I'll start out with that, and then defer where appropriate. But if you look at if you are looking at your agenda, that's where we are at under the financial and strategic review. These are all discussion items, no action items. The first, it relates to the fee policy and modernization update. I really do not have a lot to report on that. The Recorders Association recently had their summer conference. The legislation was discussed at that as a group, and we have several members of the association that could comment on that specific action or activity, and I'm not going to try to do that for anybody. So feel free to chime in. But if you just are thinking about, well, where are we at right now? I think the thought is that the leadership of the association, they'll be huddling in various ways to discuss what their next steps are. I know that the association has 2 new legislative liaisons, and Jordan Hill, who's with us this morning, and then also Julie Haggerty. So there will be discussions with them, devising some thoughts about what next steps are going to be. So that's really all I can say. I think most everybody probably knows what happened at the association's meeting, and sort of the discussion is now in the hands of the leadership. Obviously, when we have a meeting of the ESS Coordinating Committee coming up in August, this will be a topic of discussion, and hopefully we'll know more by then. So that's all I have to say on that particular topic. I or any a number of other people and that are participating in this call could answer questions if you have them.
I don't know if this is the right time or not, but I just have a question about the maintenance agreements. If if we have the fee increase, if it does not pass, what other options do we have with the maintenance agreements? How will we be able to lower those, or is there a different route to go through for those?
Well, where we are at in the process is that we are transitioning from a fiscal year to a calendar year to start with. And so the maintenance fees that are being processed right now are for basically the second half of calendar year 2025. And then we'll start the new calendar year 2026. And recorders should generally expect that we will be issuing new maintenance invoices to them for all of 2026 sometime in the spring. We know what the costs are going to be because those are in the maintenance renewals that we just completed a few months ago with the local service providers, but we probably would not be issuing invoices until maybe February, because we do need a little bit of time to calculate what the credit amounts are going to be. And we won't know that in November when we put the budgets together, but we will know that in February. And so I would anticipate that sometime in February, March, after the February ESS meeting, that any invoices to the counties will be going out at that time. And the general expectation is that the county would have ample opportunity and time to pay whatever is due for their contribution during calendar year 2026. So you're asking me to speculate a little bit. If the legislation were to be approved as is, and I would say if a very large majority of the counties stay within the 28-year agreement, then what you could expect is that, from my understanding, there's an implicit commitment to take over those maintenance costs. Okay, 100%. So if revenue is good and if the legislation passes and additional resources are coming in as a result of most counties staying within the 28-year agreement, I think you should realistically expect that that commitment will be followed through on. Okay. If the legislation does not pass and there is no additional revenue, then counties should expect that first of all, the cost sharing program would and the credits would continue. If the economy is good and resources are more plentiful, then I think I would expect that the ESS committee is going to want to increase the amount of the credits. But otherwise, it's essentially status quo if the legislation does not pass. I'm not the policymaker here, but that's sort of how I think things are set up. And generally, I would consider what I just described to you the sort of the direction that I have from the ESS coordinating committee. So if the legislation passes, we're going to work toward taking over those maintenance costs 100%. If it doesn't pass, then I think we're kind of stuck in status quo. That's where I think we are.
So is there going to be like some sort of a study group set up, or talking about like maybe the history of how this was and how it's going to be calculated going further, so that the association kind of knows what's going on?
I I don't have been. I do not have any specific direction or plans to change the calculation of the cost sharing credits. The ESS committee can change that. If they want to change the formula or if they want to allocate more resources in the budget for that, we can make that happen. We just have to kind of fit all the puzzle pieces together. So, and if there's a misunderstanding about how the formula works right now, we'd be happy to spend more effort explaining that. But bottom line, the way the formula is set right now is that we calculate basically what an average credit would be if everybody were at the state average. That's sort of the premise. And then after that is calculated, then we do the actual ratio calculations to see whether a county was above or below that average. And the counties that have a higher proportion of e-submission activity get a higher credit than those who are below the state average, sort of as an incentive for all counties to encourage e-submission, since that is the primary revenue source. Now, if the ESS committee or you as the finance subcommittee want to explore different alternatives, we have time to do that. It's something that we could talk about in the finance subcommittee in the next couple of months. So if the subcommittee here has any direction for the staff about we'd like to explore different options, we certainly can do that.
Can I address that question? This is Lisa.
Go ahead, listen.
The exec board had a meeting last week and we have, assigned a committee, and it's headed up by Jamie Stargell, of recorders who are going to be, doing a deep dive into the 28E agreement and looking at some changes to that. So they have their first meeting today, actually. So, that is being addressed. I don't know exactly what kind of changes will be made, but we've put together a group of representatives from each district to meet and discuss the 28E. Does that kind of answer your question, Geraldine?
Yes, thank you so much.
You're welcome.
Thanks, Bill.
You bet. Okay, any other questions about that? Again, I would encourage you to talk to the leadership and legislative liaisons. They can give you a more direct update on that than I can. I do want to report that the ESS team has been working very hard in the last couple of weeks to produce an annual report that will be distributed to the supervisors. Currently, it looks like we're going to be in a position to get that distributed to recorders and supervisors sometime next week. This is not a short annual report this year. It covers a lot of territory, and I hope you find it informative and useful. But we've sent draft copies of it back out to several leaders, including Lisa and Ann Ditchworth and others for input. And we've gotten good input back from them, and the edits for that are currently being made, and we're looking forward to getting it out the door. I think it will be a very good resource for all recorders to use to describe how does Iowa land records work, and what's the budget, and all of the things that people have questions about, that some of which came up in the last legislative session. Most of the answers are going to be there in one form or another, so we're looking forward to getting that distributed. Check your email inboxes next week because it should be on the way. The metric report is before you, and the chart, I mean, we've been very pleasantly surprised with overall e-submission activity and e-submission income. I think that's reflected in the financial report information that Samantha shared with you. 2022 was, particularly in the first half, a pretty good year. It did fall off fairly substantially in the second half of the year. So, I guess I would just say, to use that old phrase, we're not counting all of our chickens for the remainder of the year. I think the economy is still fairly unsettled, um, and um, and so we don't know. But to be in a position where we're close to that same peak in June that we had in 2022, that is good news. And when you kind of look at the current state of the budget, we are sitting pretty good. Part of that is because we have been holding down expenses, and we haven't filled a not insignificant software development position. We are keeping that open for the time being. Our revenue is up over projections and our expenditures are below projections. And as a result of that, when you look at the projected net income, we're over $100,000 to the good above in terms of net income at this stage of the game, compared to what we originally projected. Even in our recent budget adjustments, we're doing very well right now, and it puts us in a position to not worry so much about the second half. So if we do see that second half drop off, then we're in a position to weather that. And so it's been very good news, but we're not in a position where we say, okay, we can go and spend a lot of money on something else that just is not 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 in the cards right now. Um, the Just to skip ahead a little bit to the final bullet relating to the development cost, we did go out and communicate with the technical service providers that are available to us to do outside software development work, because our two-person team just simply does not have the capacity to do that by themselves. We have too many other irons in the fire right now. So we went out and gathered some cost estimates that has been shared. I believe you received a copy of the report previously in a separate email, not necessarily in that packet. And it speaks for itself. And to do the development work, particularly with outside parties, is a little bit beyond what our means is. In the budget that you and the ESS committee approved in May, we set aside over $70,000 for some potential outside development, and the lowest cost estimate was double that amount. So it really causes one pause. And I know maybe some people have, doubted me when I've said that we need additional resources to do some of the things that people want us to do. I would have to say that the information we gathered from our external service provider partners, affirmed that. The potential benefits of actually getting a bill passed that would generate additional income for both recorders and for land records in ESS, that is a real thing. And so we're in a pretty good position right now. I would say I would characterize our financial position as very solid, but it's solid with the status quo, not solid with being able to do a lot of things that people would like us to do. So that would be kind of my report on the metrics as well as on the estimated development costs. I'm going to defer to Lisa and Samantha to give me an update on the point of sale software updates.
I believe everyone's done. I'm going to send a reminder out, hopefully to get those all done by the end of July. I know that some people had some issues, but they were able to call in, and Professional Solution was able to help them through the update if they were having issues doing it by themselves.
Does anybody have any questions for Samantha about that? Okay, then the only other thing I have to update you on is that in the budget that was approved in May, we did make a recommendation. It was approved by you and also the ESS committee to allocate $40,000 for some potential supplemental compensation to a couple of our local service providers who don't have the economy of scale that other service providers who serve multiple counties do. And those specifically were Avenue Insights, who provides service to Ringgold County, and then also a company called DevNet that serves Marshall County. After consultation, we learned that there really isn't any intention or desire by those counties to switch service providers. They kind of want to stay with what they've got. And so, we have to recognize that, it to do what we've asked them to do. I don't feel guilty at all asking the other service providers to do, because I believe we compensate them very fairly for the work that they do over the course of the year. And there's room in that to cover the cost of the extra software development work that we've asked them to do for both the submission API and the county upload API. Very, very comfortable, very confident with that. Asking these two service providers to do the same thing, even though they serve only one county, the level of effort is still basically the same as if they were serving multiple counties. So the cost structure is just different for them. So our current maintenance agreement with the local service providers, and this is true for all of them, is that if they are burdened by a substantial request for software development beyond what would be considered ordinary maintenance, they have the ability to ask for additional compensation. So we have been in discussions with both Avenue and DevNet about the potential for providing them with additional compensation to cover their work for both APIs. And I'm actually very pleased to report to you that we have reached an agreement with Avenue on a supplemental agreement and their acceptance of the overall contract that we have offered to other service providers. And so, subject to the approval of the ESS Coordinating Committee, we would be providing them with $15,000 in additional compensation to complete the work associated with both of those APIs. With regard to DevNet, that is an ongoing conversation. I don't have anything specific to report on that, but depending on how that conversation goes, I do believe that we would be amenable to the idea of providing them with a similar level of compensation as we are proposing to do with Avenue. And we'll just see how that goes. But you know, I see the communication that goes back weekly and daily between Myrna and Nancy and the Avenue development team. And I know how much effort they're putting into it. Um, and uh, and I can observe the same thing happening with DevNet. So I don't feel reluctant in any way about taking this extraordinary measure, because the alternative would be to say to those two reporters, I'm sorry, you're going to have to change service providers. And we don't want to be in a position. Now, it would be a completely different story if 99 counties had 99 separate service providers. That might be a challenge. But two counties, sort of outliers that are doing what the recorders want them to do, I think we can go an extra mile to help make sure that they're included in all of this. So you can anticipate sometime within the next 30 days, hopefully sooner, that we'll have ask for a special meeting of the ESS Coordinating Committee to approve at a minimum the agreements that we have developed with Avenue, and possibly that could include DevNet as well. So I'd be happy to answer any questions about that. No action has been taken, but work behind the scenes has brought us to this point.
Any questions for Phil about that? No, you did a good job explaining it. So,
And anytime you can be under budget, that's even better. So, so that's good. I'd be happy to answer any questions about this or any other topics. And if there are other topics that I can't answer, I'm happy to yield the floor. But that's all we have today. Thank you.
thank you, Phil. Any other questions for the ILR team or for the good of the group? Well, hearing none, our next meeting is, it's in August. I think it's August 8th. That's what I have on my calendar, August 8th, 2025. We'll see everybody next month. Thank you, everybody.
Thank you.
Take care.
Have a good day.
Thank you.
Thank you.